Markets, end of cycle signs everywhere. Good news from Korea, but is it good news for the market? Stay tuned, we'll discuss this and much more. Hello, this is Michael Loftus for Wealth and Wisdom TV, where education is the key to a successful financial future. First up, don't forget you can click Show More for additional information, links to articles, glossaries, etc. from today's video. Also, if you're looking for a different opinion other than Wall Street or the talking heads, please do consider subscribing. First up, numbers, weekend 427. Not much going on here, pretty much flat across the board. Let's go to the big charts. Yes, I keep saying I'm not going to show this chart, but last week the theme was sideways markets. Doesn't get any more sideways than this. Down 0.01 last week. Even Friday, big breakthrough earnings from a certain company. Hey Stace, enough already with the boxes. I have nowhere to put them. That couldn't even help us. We were flat to end the week. Next up, new chart here. Just a clean chart of the S&P year to date. And you can see the box that we're stuck in. Not much movement so far. Here's our chart we've been showing all year. At the bottom, VIX broke 16. Good sign. Next up at the top, RSI Relative Strength. Not a lot of strength, as I've said. Cannot get above and sustain above 50, which would be more bullish indeed. Momentum, flat, as you would expect in kind of market we had last week. In the middle of the chart there, just a lot of noise. The bottom line is we hit resistance, we fail. We go down, but we hit the 200, we save it, we come back up. So back and forth today with futures. Upside resistance going to be your 50-day and 100-day moving average. If, and I mean if, we can move above and sustain, possibly we could see something. So let's look at those possibilities. Updated the chart from March, pretty much the same. You've got option number one, retest the lows. We did that last week, but do we retest and break through? To be determined. Option number two, yes, we break through all-time highs. Personally, I don't see that, but it is a possibility to get above some of that resistance. And option number three is range bound, which would be fairly boring. So right now, short-term signals are positive. Next up, weekly chart. Continue to see that movement to the upside. We broke through our 15-16 trend line. At the bottom, momentum, MACD and PMO both represent momentum of the market. We've had negative crossovers, so midterm, negative right now. And next, finishing things off, long-term view. The monthly, we hit our all-time high in January, lower high. At least in April, it does not look like we're going to have another low here. Again, to be determined, but with futures looking good. So you can see that bullish uptrend, and no doubt, this way, I'm opposite. Bullish uptrend represents our long-term view as still positive. Nasdaq, same view. The main thing here is we were starting to see a head and shoulders, which is not positive. I'll have Michelle point that out, which could be more bearish, but it looks like we held on Friday, moved up a little bit, to be determined. Market breadth, been talking about this. No reason to show this week, as you can imagine, no movement with the sideways market. International, same as US, not a lot of movement last week, so here's your numbers, not much to talk about. Sectors. Representing 76% of the S&P. Here across the board, same thing. Industrials got hit pretty bad last week. So again, kind of meandering along here. I think consumer discretion, although it was up, is down quite a bit from the beginning of the year. Wrapping things up in this section, U.S. equities, 8 of 12 are in an upswing, so we're in an uptrend. International, just 16 of 53 in an uptrend, but that's down from 25. So as a group, we are down. And again, our signals, short-term positive, mid-term negative, long-term positive. Treasury spreads continue to break down. End the week at 0.47. Continue to be concerned about this. Here's your box going back to 15. And as you see, we got up against it on the end of the week. This is a monthly chart. And then we, in fact, have failed at this point. But I think that break is, in fact, coming. We called this one of the most important charts at the beginning of the year, and you can see what's happening if we get above that upper trend line. To me, that's going to be a concern, but we will see. Next up on my radar. So something different this time. I'm going to talk about end of cycle signs on my radar because we're seeing a bit of a secular shift here, pretty significant, specifically as it pertains to commodities. And there's an example and a description below what defines commodities. But look at your S&P here on one side of the chart. And then again, oil up year to date. Gold flat, kind of different though. Corn, soybeans, wheat, cotton, lumber, really up big time, almost 30%. So we're seeing a little bit of a secular shift here, and we might be dipping in some opportunities here as we go forward. End of cycle ideas here again. ISM, manufacturing, Richmond, Philadelphia, New York, and the overall have all peaked and started turning downwards. Not a good sign. Growth. This is from our friends at Hedgeye, an article from the Wall Street Journal, and you see where we are. But yeah, we've hit a peak again, and like Friday says, we are going to come in with a lower number, 2.3. Not a good sign as we go forward. High ticket discretion, we talked about this being down, peak and rolling over again. This is from our friends at Hedgeye. Consumer confidence, guess what? Peak, rolling over. So, I know it sounds like, I'm being repetitive, but another sign on end of cycle. And our wrapping up here with our friends at Hedgeye. They do a daily cartoon. There's your bull and bear at the top. Now what? Because they're at the peak. We'll see. Next up, what keeps me up at night? So here, the dollar. I've not talked about it in a while. We talked about our double bottom about a month ago, which was a positive sign. Did a consolidation, and then we broke out big time. So dollar stronger is not a good thing generally because cost of goods become more expensive for the international market. So that's really going to affect them. This is also a sign of inflation and rising interest rates. So we're going to continue to watch this and the impact. Next up, housing. What? We look at this at the bottom there, the price there at the bottom. The green is your hourly wages. So kind of have gone up, but really pretty flat. Next up in blue are rental incomes, rent prices. Kind of went up a little bit, but not a big disparity, pretty consistent. And then we've had housing prices shoot up. And when you have that disparity between wage and housing prices, well, I think the chart will speak for itself. Next up, gas prices. We're feeling it. Yes, it says about $2.15, but I tell you locally, we're over $2.90. What does that mean? Obviously inflation, less in our pocket, and most importantly, the tax plan impact, I think is going to be really moot as we continue to see that rising. Korea, we talked about this. Good sign, bad sign? We'll take a look. The last two times that we had a summit, they came to peace. Interesting. Peak of the market as well. Very interesting. Wrapping things up here, we've been talking about the Fed balance sheet. Quick update. Again, quantitative easing was flooding the market with liquidity, driving rates down. People could borrow, not people, yes, but corporations borrowing, buybacks. But here is a look at quantitative tightening, QT, okay, and you see the move to the downside. There is no white paper for this. The implication for me, this will continue to drive the markets to the downside because we don't know what's going to happen in taking away that liquidity. Wrapping things up, fear and greed. Last week 38, this week 40, still slightly on the fear side. Again, our signals, short-term positive, Midterm, negative. Long-term, positive. Together we are neutral, which means new money. We're going to take our time, really be patient, and look for opportunities. As always, thank you so much for watching. This is Michael Loftus for Wealth and Wisdom TV.